What's going on, everyone? It is February 7th, 2021. Welcome to the weekend recap on A to Z. And let's go ahead and get started with this. All right, so we had an interesting week, very bullish. And let's kind of go back and talk a little bit about what we were saying on the recap last week. So again, before we get started with this, you guys know I have no idea what I'm talking about, not financial advice. Enjoy this purely for entertainment. Now, with that out of the way, the hypothesis last weekend was that we were going to have a move lower for a few days, knowing that the market has swift down moves and then quickly recovers. And it was interesting in that we didn't really even get that opportunity. Sunday evening, I was taking a look at the futures. There was a move lower, strong move lower. Very excited. You guys saw my positions last weekend. However, the technical move happened in the overnight session. And this is kind of one of the things that actually happens very regularly, in that moves at technical points that we would want to capitalize on, we do not have the opportunity because it happens in times in which we not necessarily expect it. So our thought process last weekend was that we had a nice clean look at the 50 and the ES or S&P 500, and the potential was there to move lower. However, what we were waiting for was NASDAQ, after it had broken below its 20-day simple moving average, to ultimately then move down to its 50-day simple moving average. Our thought was that this could potentially happen during the week, and then that would be our point where we would reverse our short positions and start to go long. However, what happened was that Sunday evening, we had a strong drive lower. In the overnight session, we hit that 50-day simple moving average and haven't looked back since. So that looked to have been a strong catalyst towards this move higher all week, which was impressively strong, and I feel now has put us in cruise control just to continue to grind higher. So let's just take a look here at the S&P 500. So you could see here what happened was we came down below the 20, tagged the 50, looked below, came right back above, and now we've reclaimed all-time highs. This looks pretty strong here as long as we stay above here. And let's take a look here on the cash index. I feel as long as we're staying above about 3870 in the cash index, then we look good to stay long. If you take a look at the NASDAQ, this is pretty interesting in that we're just shelving right here at the prior all-time highs. This still, though, overall looks pretty bullish. So what we had here this week was that reversal came back up to the prior all-time highs. What you had here on February 3rd was a very technical pullback right off of the prior all-time highs. That was a really nice place to look at. Okay, if you had positions which were long, seeing the point in which we reversed right at the prior all-time high, that gave confidence in staying in your long positions. Seeing that the pullback was not very strong also gave confidence in long positions. Once we've now reclaimed that, gone above that prior all-time high, to me still looks good. The Russell finally had a technical pullback to the 20-day simple moving average. Again, all coinciding with that NASDAQ pullback, and things have just gone to the races since. This looks very strong here. I don't see anything here that looks weak whatsoever. I'm not looking in any ways at any of these indices at any sort of shorts. Let's quickly go through here the Fang Stocks. I'm not really seeing much here. I think we're having a paradigm shift in the overall market, in that these are likely just almost just sideways to slowly higher plays. Nothing with the sort of growth that these other companies are going to have. I really feel as if these are going to be going more towards the back burner, and there's a lot more opportunity to be had with other positions. Now, Facebook, looking at this, again, just chopping around in range. To me, when I'm looking at it here, somewhere around this, 270 level, I think that if we look out here going to about 2 weeks, looking at a 270 straddle or a 270 iron fly, let's take a look at that. So the call side at 270 going out to February 19th is $5, and the put side is about $7. So you got about $12. So let's see if we sold the 270 call. bought the 285 call, sold the 270 put, and then bought the 255 put. So that's about $9 in credit going out to 2 weeks for a $15 wide iron fly. That actually doesn't sound too bad. Okay, so your credit is 9, your risk is 6. And again, just looking to see if you could get $1 or $2 off of that. That actually looks pretty reasonable. Let's take a look at Apple. Apple here still looks pretty good. Okay, we've come down, tagged the 20, and we've slowly been recovering above that. I think that if we can get back above here about 138.80, then we would be looking at potentially adding positions. Apple had its news this week, not official, but increasing rumors regarding their tie-up with Kia and building an Apple car. However, there were some interesting news that came out late Friday evening that there may be some stalling in the conversation. So let's just see how that plays out. But to me, Apple, I'm long, I'm staying long. Netflix, this had a really nice bounce here, come up and stayed above its 20-day simple moving average. You could see this ascending trend line going back from January 27th. And then if you draw that ascending trend line up through February 4th, as long as we stay above that, I feel that Netflix looks to be setting itself up to potentially get back long. Amazon, this had earnings this week. We've really been looking into this. There was interesting news that came out with Amazon with Jeff Bezos saying that he's going to be stepping down. And there was decent volume in selling following that news. However, if you look, we've broken out above this ascending trend line or descending trend line. And we came back on that sell-off. It tagged right on that trend line. The following day, we went below that and then closed above it. And then on Friday, we showed a little bit of strength in Amazon, and we've still maintained above this trend line. So to me, it looks like as long as we're staying above 3,300 as a low point, Amazon looks like it may still be going sideways to higher. And then certainly above 3,350 to 3,360 also looks to be a long. Now, I don't think this is going to be a strong long. I'm not looking at Amazon any longer as having these tremendous moves. Again, I could very well be wrong, but I feel looking at its history here going back several months, this may just be a sideways to grind higher. Microsoft, this looks really strong, I would say, of, the classic tech stocks. This looks the strongest. It broke out to an all-time high with its earnings, and it's just been consolidating above that. Again, as long as we stay above 232.50, I think that this is going to go higher. So looking at this, what I would be looking at is I'm already in some long calls here, which are in the money. And what I may be looking at is if there is just going to be some consolidation here at this point for Microsoft, seeing what's out there here, looking at 2 weeks out. Let's take a look at the 242.50 iron fly. So you could see the call side on Microsoft, it's about 370. Put side is about 450. So that's getting us close to $8. Let's take a look at an iron fly going out 2 weeks. So if we sold the 242.50 call, purchased the 250 call, sold the 242.50 put, and then if we purchase then the 235 put. So that's about $5.23 of credit for a $7.50 wide iron fly. That's actually not bad. So you're risking just under $2 or just about $2 for $5 potential credit, thinking that Microsoft may want to consolidate a bit here. So I'm actually going to save this. This looks really good to me. So again, this is a Microsoft 242.50, either straddle you could look at if you have the margin, or looking at a iron fly, which is 242.50 call put, and then buying the 250 call and the 235 put. So I'm going to put that on my list. That's going to be something I'm going to be looking at here this week. Tesla, to me, looked like it was potentially waking up on Friday. However, there's a lot of false signals going on here with Tesla as well. Ever since it's been added to the S&P 500, those strong, powerful moves have largely been negated. It's been great if you're going to be collecting premium. You can see that we've just been chopping around here at 850. We're sitting right here on its 20-day simple moving average, which is at that level. So I've taken a small position long in Tesla to see if we're going to have any sort of strength and move higher. But if that's not really happening this week, I'm just going to look at it as, again, just a credit collection play. NVIDIA, to me, sideways. This is going to be due to report earnings here, not this week, but the following week. Just nothing there. Google, exceptionally strong. Okay, so Microsoft and Google look to be the strongest of the classic tech stocks. I got a nice long position here in Google. This to me looks like it's going to be going higher. AMD just looks terrible, just consolidating here below its 20 and 50-day simple moving averages. Nothing there that I'm going to be looking at. Adobe, this looks good. Okay, Adobe, let's take a look at when their earnings are due to report. So Adobe's not due to report earnings until late into March. So there's quite a bit of time here for Adobe to potentially have a move up into earnings. So what I'm looking at here is that Adobe is now closed above its 20 and 50-day simple moving average. I would say as a first target to about 505 in Adobe. If we can get up to 505, go sideways a bit here for a week or so, I'm going to be looking at a play into earnings back up to its prior all-time highs of 535. So let's look at a first target of about 505 in Adobe. If we can get up there, build a shelf, kind of go sideways for a bit, I'm going to be looking for that to be going higher. What else do we have here on the list? Let's take a look at actually ones that I feel are really looking nice. Zoom. Okay, Zoom has had a really nice move here. So it's been going sideways here for quite a bit of time. It's been building up this base. And Friday we had a nice uptick in volume and a nice move above here. Its prior resistance point of about 400 to 405. So for Zoom, what I'm looking at here as about 435 as a first target. Second target would be a gap fill here on that move lower to about 460. So I'm long Zoom. I'm in some call butterflies. So 435, first target for Zoom for me. Beyond that, I'm going to be looking at about 460. And let's just see. Zoom has been very erratic. It's had these breakouts and then move lowers. So let's see if we can have some push higher here on Zoom, but I'm looking at that. Let's take a look at Fubo. So Fubo here, this is going sideways. There's quite a bit of short interest in this. There's a lot of thought that could this be something similar to GameStop and then move higher. I've actually subscribed now to Fubo. It's decent, right? You've heard me talking about Fubo. Who's going to be watching or using Fubo? Have you heard of anyone? Well, now that's me. All right, I wanted to check it out, see what it's all about. It's really not that impressive of streaming software, but looking at the stock, it's just looking to be consolidating here around that 50 level. There is quite a bit of volatility here. So if you look at the IV is 162% going out into February. So there's quite a bit of credit out there. If you wanted to look at a 50 call, 50 put straddle, just that on its own is $11. And if we looked at that and we wanted to cap that due to margin, if we sold the 50 call, the 50 put, if we bought the, let's say, 60 call and 40 put, that's not bad. So that I may actually want to save this and look at that. So an iron fly of Fubo at the 50 strike going out 2 weeks gets you $7.27 a credit with about a $2.75 risk. Let's take a look at Fubo, just make sure it's not going to have earnings here anytime soon. Yeah, Fubo is not due to report earnings until March 2nd. So I'm going to save that. I like that. Fubo to potentially just chop around here. IPOE, you guys know I have a long position on this. If you take a look at this chart, we have this ascending trend line going back to about January 2nd. We had previously looked below that, reclaimed it, and now on Friday we had a pullback right to that trend line. So as long as we stay above here about $23 in IPOE, I feel this is still long. JMIA, this is one that's just been a printing press here for the past several months. It's looked really strong. JMIA, though, they are going to be due to report earnings here pretty soon. Let's take a look. JMIA is due to report earnings on February 24th. So you got about a couple of weeks before they're going to do that. I think that JMIA here, it just may need to digest itself for a little bit. So what I've been looking at is collecting some credit on this, but leading up into earnings, I'm probably going to get out of all positions because this has been exceptionally strong, and it may just end up being one of those things that reports less than ideal earnings and has a pullback. When it pulls back, or if it pulls back, that's what I'm going to be looking at adding here in a JMIA. Corsair, you guys know we've had this on the list, exceptionally strong, looks beautiful, okay? This had a really strong move higher here this week. And Corsair is due, though, to report earnings here on Tuesday morning, so in just a couple of days. So I'm going to be looking at flattening my positions on Corsair. I think that they're going to do well. Now, what's going to happen? You never know. It's always a toss-up. But if we look at Logitech, right, they're also in the peripheral landscape. This has been just a beast going back here to the past year. So Corsair, if it's going to potentially model itself after Logitech, this may be setting itself up for a several-month consolidation and then ultimately breaking out above that and starting a next leg higher. So I like Corsair. I think long-term its prospects are good. But at the moment, what we're going to do is personally just stay out of that. So Skills, SKLZ, we've talked about this several times. Amazing. So they had announced a partnership here this week with the NFL. Okay. Based on that news, Skills had a massive gap higher and hit a new all-time high of $46. So right now, to me, this looks like there's a lot of momentum here behind it, but we do know there's also quite a bit of actual institution money that's coming out. You get the nightly ARK Investment email newsletters with their positions, and they've purchased on a couple of occasions some stock here with SKLZ. So I'm going to look at SKLZ, see if we can hopefully get any sort of pullback here towards this gap of 35, maybe looking to add some positions, and certainly if we get down into the 30s, then adding more, but we may not even get that opportunity. SPCE, we've been talking about this, SpaceX. So this is a tremendous move higher, and it may just be one of those things here that just needs to consolidate here for a bit around this 50 to 60 level. So let's take a look at SPCE and see what's out there for, let's say, 55 strike, iron fly. So 55 call, 55 put. It's about $7 each. So let's take a look at $10 wide. So if we sold the 55 call and put, purchase the 65 call and the 45 put to cap it off, that's $7.50. Okay, so again, what we're looking at here is just to see if there's any sort of consolidation that may happen here in SPCE that's going to want to build itself up for its next leg higher. I like it. I think that's going to be another play that I'm going to be looking at saving. Pinterest, okay, this was really a unique name this week. Not necessarily unique. It's pretty much the common name that everyone is going to be utilizing now, but had amazing earnings, okay, had a gap higher and then sold off from that gap. So there was some news that came out on Friday evening that Cathie Wood with ARK Investments divested over 1 million shares of her Pinterest position. So we'll see how this opens up here on Monday. This looks strong, okay. As long as we're able to stay above here, this move above its prior all-time highs, I think that we should just still be looking at staying in this position and staying long because I'm currently in this. I like it. DraftKings, okay, this right now to me, this looks really good. So there's a lot of news coming out with Penn and Barstool Sports and DraftKings now with online sports betting. The whole world right now, as far as gambling, they need to find their fix somehow. And clearly going to Las Vegas or Macau to any of these casinos is unlikely to happen relatively soon. And this is just going to be the natural shift that's going to happen, and that states are going to open up and allow gambling to happen online. It's inevitable. This is just a transition, I feel, from the in-person to digital technology space, similar to Zoom, right? We used to have meetings in person. Now we do everything via Zoom. You saw what happened with Zoom. I think there's a lot of potential here in DraftKings and Penn. So what I'm going to be looking at here is I have a position here in DraftKings. This was chopping me up here about 55, 56. Once we finally got above that, we've moved back up to its prior highs here at the 64 level. So I think that if we can go sideways here, this is setting itself up for a potential next move higher. But we got to keep an eye on this because this may be a point where we just have short-term traders who have looked at it and they said, okay, we're going to collect some profit here and it's going to sell back down. If it moves back down, I think that's just going to give more entry positions to add positions to this. I think that if we can get down to 55, we add, because to me, again, I feel that this space, given the nature of the world currently, this is going to likely have potential to move higher. ROKU, this was a really nice trade that we had where we were looking at this came down, tagged its 20, had a really strong move higher, and it looks to be setting itself up to about 450. Now let's take a look at the ROKU. I believe they're due to report earnings here pretty soon. So February 18th. So you still have another week and a half before ROKU is going to report earnings. I think that, something really clean, really small, just a short-term call vertical to target 450 its prior highs. I think that's pretty reasonable. And lastly, let's take a look at PLTR. So PLTR had a nice move higher here in late January, and it's pulled back. This pullback, I feel, has been a nice buyable point. So it's pulled back. It looks to have established itself at a base here at about low 30s, and it looks like it's setting itself up for a potential next move higher. So as long as we stay above here about 33.50, to me, I think we target back to its prior highs of 45 with time. So what I'm going to be looking at in PLTR is aggressively looking at potentially selling some 30 strike puts. Let's take a look at how much those are going out into February. So February 19th, 30 strike puts are $1.50. And then looking below that, then we see that's $27.85. Now PLTR, they are due to report earnings here pretty soon. They're going to report earnings on February 16th. So what I'm going to be looking at is potentially a move higher into earnings. And just before earnings, I will likely flatten out all those positions and just see what happens. So with all that in mind, that's all I have for you guys this morning. Good luck next week.